Welcome everybody, and in this lecture we will discuss about section 54F. So what is the section? Section 54F. So what it is talking about? It is talking about deduction in respect of capital gain, right? Deduction in respect of capital gain. When you transfer any long-term capital asset, it can be jewelry, it can be shares, any long term capital asset, but other than residential house property. So deduction in respect of capital gains, when you sell any long term capital gains, any long term capital asset other than residential house property. So here you should not sell residential house property. Any other long term capital gain, it's okay, right? And you will get deduction under this section, that is 54F. Now to whom it is given? It is given only to two people, either individual or HUF. To whom it is given? Only to individual and HUF. Is it given to partnership firm? Is it given to company? Is it given to LLP? Is it given to local authority? The answer is no, 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 no. It is only given to individual and HUF. Next point, what they should do? The individual HUF should transfer any long-term capital asset other than residential house property. Now when they sell that, they will get some money, right? That money should be used to buy a residential house property, which is chargeable to tax under section 22 under Income Tax Act. That means the residential house property which you are going to buy, it should be basically owned, and I am forgetting actually. Yeah, that residential house property must be there, and it must be owned, and it should not be used for business and profession. Chalo, I forgot for some seconds actually, but I remember now. So what is section 22 talking about? There must be a house property, it must be owned and not used for business and profession. Now the residential house property which I will discuss under this section should satisfy these three conditions. Okay. So what has to be done? Section 54 talks about deduction in respect of transfer of long-term capital asset other than residential house property. This deduction is given only to two assessees, that is individual and HUF. It is given when you sell long-term capital asset other than residential house property, and when you get the money of that you should use for buying a residential house property, that is chargeable to tax under section 22. That house property must be in India, that's a compulsory thing. That residential house which you are going to buy must be in India. That is a very important condition, right? It must be in India, correct? Then you cannot buy, okay, at the time of buying residential house, you can have only one residential house. So I have one plus one I am buying, you will get exemption under section 54. If you don't have one residential house and you are buying one residential house, still you will get exemption under 54 or deduction under 54. But if you have more than one house property already with you, you have 2, 3, 4 residential house properties already with you, then you cannot claim exemption under section 54F. You cannot claim exemption under section 54F, right? And one more thing, when you buy this residential house, right, and you are enjoying the deduction under 54F, it means that you also should comply with one condition, that is you should not buy another residential house. Okay, you bought this, you got exemption. Now you should not buy one more, either in 1 year backwards from the date of transfer of the long-term capital asset, or within 2 years forward from the date of transfer, or you should not construct within 3 years from the date of transfer. If you do this, that's more than enough. Okay, clear? Very good. So, देखो, you may have one and you are buying one. That's okay. But when you bought one and gained the benefit of exemption or deduction under 54, then there is no point again in getting or buying one more, right? To enjoy that exemption. Suppose you buy the third one, then you lose the exemption, right? The third one, if you buy within how much time? Within 1 year backward, 2 year forward purchases, and 3 year forward construction. From which date? From the date of sale of long term capital asset. This you should keep in mind. Now, total confusion you are getting or full clarity? Don't worry. Simply think that you don't have house or you have only one house. In that case, you sold any long term capital asset other than residential house property and you purchase one more residential house property, right? You have one, so one more. If you don't have, you purchased one, then you get exemption under 54. But then once you bought one, you cannot buy another, right? So buying should be of one, not two. That's what you should remember. Okay, now when this should be bought? From the date of sale of long term capital asset within 2 years forward, that means you should purchase within 2 years, or 1 year backward, that is purchase within that 1 year, or construct within next 3 years. This way you should remember the topic. Okay, clarity, no doubt should be there in your mind. Now, okay, there is something called as lock-in period here also. The new asset purchased, you cannot sell up to 3 years. The new asset purchased, you cannot sell up to 3 years. Okay, and you will get the exemption, you will get the deduction. How much? Least of the following two. First one, the investment in new asset into long term capital gain. Investment in new asset into long term capital gain, right? Investment in new asset into long term capital gain divided by net sale consideration. Investment in new asset into long term capital gain divided by net sale consideration. This amount whatever you get, or second point, long term capital gain, whichever is lower, you can claim it as exemption, right? Formula is very clear. Least of the following two you can claim exemption deduction under 54. First one is you take investment in new asset, so purchase price of new asset in simple language, multiply that with long term capital gain what you got while calculation, divided by net sale consideration. Now you know what is net sale consideration, right? Sale consideration minus transfer expenses. Once you get this, you compare that with long term capital gain, and whichever is lower you will get the exemption deduction, and once you deduct you will get taxable long term capital gain. That's it. Now I will take you to the next part. Suppose example, you break the conditions. That means the asset which you purchased, you sold within 3 years, or you purchased another house property within the stipulated time period. If this happens, then I'll simply tell you one thing, that whatever exemption you got earlier, right, on the sale of that long term capital asset, that exemption will be taxable again. That exemption will be taxable again. So you enjoyed exemption, you saved tax at that time, but because you defaulted on that, you have to pay tax again. Suppose example, you kept the money in capital gain account scheme because you did not construct the house or purchase the house within the due date of filing returns. So you invested the money in capital gain account scheme, and that money is not withdrawn. Neither you purchased the house nor you constructed the house. Money is anyhow not withdrawn because of that reason. Then in that case, once the period capital gains 3 years period expires, right, from the date of transfer, sale of long term capital asset up to 3 years, that period expires. Once that period expired, the amount will be taxable. In the capital gain account scheme, whatever amount is there, that will be taxable. But here also formula, unutilized amount into, that means unutilized means whatever is there in the account, into long term capital gain divided by net sale consideration. Okay, this way we should understand the topic. No difficulties in this. Sometimes in the question they will give you like this. They will say that you sold 2 assets, 3 assets, and you purchased a residential house. Now, for which asset sold you should get exemption or deduction under 54F? The answer is very simple. Wherever you can get maximum deduction, there you try to claim the deduction. Suppose here you are getting 8 lakhs deduction, here you are getting 3 lakhs deduction. It is better that take 8 lakhs deduction so that you can save more taxes.